Hey there traders, thanks for joining me for this week's free video of the major market averages. We're going to go through a handful of the indices, kind of just eyeball where we are right now, discuss the general market conditions, and of course point out some key levels to keep on the radar as we head into one of the lightest volume weeks of the year, which is July 4th. It rivals Thanksgiving every year as far as lightest volume and lightest participation, so expect to trade smaller this week if you do participate, because it will be thinner volume, as is typical with people just with their minds on other things and stepping away from the market temporarily to take vacations or to just travel or hang out and lay low. And so with that said, last week we saw a pretty interesting week. We had come off the previous week little 3-day decline, that Wednesday, Thursday, Friday sell-off, which took us through support for the NASDAQ, and we saw this gap fill from this 33.70 down to 33.40. And then Monday of last week, we continued lower, marked a short-term turning point down here at this 32.94 level, which was on Monday. And then from there, we lifted into Friday. Now, Friday's gain, pretty incremental. It was only up a point and change, and we did see very heavy volume across the board, and the only reason for that is because it was the end of the second quarter. It's the final trading day in June, and so it's the end of the first half, and so at the end of the quarter you get lots of cross currents with index rebalancing. Sometimes you get some portfolio turnover and window dressing by fund managers, and there's a lot going on, and that's really what was the culprit behind the heavy volume. Now, we did see a potential higher low carved out because we kind of stumbled into the close. We've already got one lower high here for the NASDAQ, which is right here at this 34.88 level. And then, of course, we've got Friday's high, 34.22, which is going to be the level to watch in the short term on the way back up in the next few days. Now, what I thought was interesting was from Monday's close down here to Friday's close, we saw an 83-point gain for the NASDAQ. Okay? But if you'll notice, there's some gaps in here. And I found, just with a couple of minutes of just kind of glancing over it, that we saw during the bells between normal trading hours, from the opening bell to the closing bell, from Tuesday to Friday, we only saw 18 points of upside. So the rest of that right there, what is that, 65 points, was represented in terms of upside gaps. So the bulk of this 83-point lift from Monday's close to Friday's close, the bulk of this took place overnight. So if you didn't really participate in last week's lift, that's okay. You know, we got basically an oversold bounce. And what we also did was so far failed to fill this gap from the previous Thursday. So I think that that's notable as well. That gap extends to 34.43, but I think right now the biggest danger for the NASDAQ is a potential lower high here, a second lower high. So we'll see if we get any kind of a rollover type of move, and really a break below about Friday's low would start to kind of set it in motion again for a possible sell-off. We'll see what takes place, but that's kind of a good look at the NASDAQ. Now, the S&P, not real different from the NASDAQ in terms of the potential here for a second lower high. Now, this right here was the high. That was right up here at 1687. We bounced back 2 weeks ago to 1654, and then last week on Thursday, we got to 1620. Now, we did have this kind of reaction pullback low on Monday down here at 1560. So we'll see if we're going to retreat back down toward that level or not. Here again, though, we saw very heavy volume on Friday with the end of the quarter action, and just kind of a weak finish. If I flip over to the intraday chart, here's the last little 15-20 minutes of the day right here, and we just kind of stumbled into the bell. So that was sort of indicative of what we had seen a few other times during the week. If I zoom out a little bit here, we saw some weak finishes right here and here and here, and a little bit of a slide here, and another one there. So pretty much every day last week we saw some late day weakness, which really just points to an unwillingness on the part of the buyers to be aggressive late in the session. So I think that that's notable for the S&P, but we're above this 1597 for now, but I really don't expect this bounce to last, again, based on the fact that so much of it has come by way of a gap, and we've got this really light volume that's accompanied it. So weak finishes, light volume, and a little bit of a retracement type of bounce following a hard sell-off is just not real convincing at this point. Here's a look at the Russell 2000. We had the high up here at 1008. We saw a lower high created 2 weeks ago at 1001, or 1001, I guess I could say. And then we sold off. We broke down through this 970 area for good. Then we again tested this 954 area, and last week we were able to reclaim both 954 and 970, but we're not making much progress. And again, this gap right here remains slightly unfilled. It goes up to 986.5 for the Russell. So this also looks like a potential second lower high for the Russell. And then you've got the Dow, which is also starting to roll over a little bit here. We saw a very weak finish on Friday. And again, take a look at here just the last little bit of the day. This thing was basically from down about 100 points in just the last few minutes of trading. So what that does is, again, start to carve out a little bit of a potential lower high here for the Dow. Now we've got the low from last week at 14,551, and then beneath that is going to be 14,380. So if we get back beneath this 14,887, which we've basically cleared for now, we're just holding narrowly above it as of Friday's close. We get beneath that, then the next level to watch is Monday's low right here, followed by 14,380. Now one more chart I do want to point out is the VIX. This is the volatility index, and we've seen very few closes above the 20 level really for the better part of the past year. Now if you go back a full year, yeah, we've seen a few closes above it, but not very many. We saw one back here in late December. Remember all the fiscal cliff worries right there, which were quickly erased as the VIX tumbled and the market spiked higher. But then last week on Monday, we got our second close in 3 sessions above the 20 level, again, only to retreat quickly and finish the week near 17. So volatility is definitely up from this 11 level, from the 12 to 13 range. It's been kind of the real key support throughout this calendar year, but for now we have seen a little bit of a dip in volatility. We'll see if volatility happens to turn aggressively higher with any pullback in stock prices should we happen to see this current bounce begin to fail. Now, if you're looking for some additional trade ideas to add to your own, stop by thestockbandit.com. We do offer a free trial to first-time users. We'd love to show you what we're all about. I'm, of course, sharing my trading plan, my nightly analysis with traders at thestockbandit.com. And I'm always there to help out individuals who need some assistance in terms of kind of getting back on track and answering questions for them as they navigate the market environment. Now, with that said, enjoy the remainder of your weekend. Go get them this week. Trade smaller because it is light volume, July 4th week. But other than that, enjoy your time. Step away from the markets a little bit, spend some downtime, and relax and get ready for the second half, because my expectation is it's going to be a very important one. Thanks again for joining me for this video. I will have more for you soon, but until then, trade like a bandit.